Good morning, good afternoon, good evening, and welcome to the slightly late running. My apologies, slightly late running Bull versus Bear webinar. Steve Miley on the call for trade day on today, Wednesday, the 25th of January, halfway through the week. So, welcome everyone. We're going to go for our usual regular run through in here today. Calendar, what we've had, what we've got coming up. Take a look at articles from the major news wires, and we'll take a look at some of the potential trigger points on the charts. Okay, it's going to be a fairly brief webinar today, so I'm going to fly through this. I'll get all of that covered, but we're going to get through it fairly quickly. So first things to say, what we've had. Well, you know what? A fairly light calendaring this morning. We did get in here German IFO data. German business expectations beat expectations slightly in here. I think I've got an article on this, yeah. So IFO economists see Germany dodging recession, optimism spreading. So slightly positive on that front out of Europe in this morning, small positive there. So we've had that certainly. And then on the calendar going into today, Bank of Canada, the main focus, expected to hike by 25. Obviously, the statement and then an hour later, the press conference are going to be important. In between those, so the decision 10 a.m. Eastern. The press conference 11 a.m. Eastern. In between them, we get the crude oil inventory data at 10:30 Eastern. So that's the focus for this afternoon. No significant big normal macro data from the US today. But nevertheless, I think the Bank of Canada could be interesting just to see if we get any kind of shift in tone. Is it echoing what we're kind of expecting from the Fed in a week's time? So of that one, the slowdown in hikes, and then also where they're going forward. Okay, so we've got that going on the data front. On the earnings calendar, just stepping back to yesterday, first of all, Microsoft obviously was the big headline, a very aggressive whipsaw session, initially spiking up on this slight beat on the EPS, the earnings per share. So we saw a 5/6% rally in Microsoft immediately on the earnings announcement. And then when we got to further details, it was about nearly an hour later, a significant plus 5-6% sell-off, and actually ended up down overnight, and they're projected down in here. They've also had an outage of Outlook and Teams today. Through, if you've missed that, there's been an outage with some of the Microsoft services this morning. So that's not helped matters either. But the push lower in here because of the forward guidance in here. I don't know if they got it on 5 things. In the European one, they did in here, yeah. So erase early post earnings gains of Tuesday. I've said revenue growth in its cloud computing business, Azure, will decelerate. So forward guidance in here for its cloud-based computing was negative, and that saw the reversal back lower. Predicting a recession, this recession cycle is proving to be more confounding than ever. We spoke about this, right? We spoke about this yesterday. Of a recession. 6 to 9 months ago, we were kind of nailing on a recession with inflation running away, super hawkish Fed. Certainly we're looking for a recession in Europe and UK, very likely also in the US. Now it's like getting hard to predict, and it's going to be marginal. What it does tell you is if we do go into recession, it's unlikely to be deep, right? It's probably not going to be deep. So on that front, at least in the short to intermediate term, some positives there in that not as negative as previous thought. And that traders have begun hedging the possibility that the rate hike in February will be the last before a pause beginning in March. So even though, okay, I'm just going to open this one up in here, bond traders hedge prospects, this might be the Fed swap prices in chance of a March pause after. So we tend to look at in here, right? And we've been looking in here at the Fed tool, and we've got obviously 25 basis point locked in, and then we've got another 25 basis point pretty much locked in according to the Fed tool. But according to other measures in here, from the bond market, as I say, in here, we're seeing Fed swap rates in here and pushing into options to hedge against a more dovish Fed scenarios. So we're seeing certainly in some places risk of only now one more hike. Okay, one more hike coming and a small chance, approximately 8%. That's raised the benchmark by a quarter point next week. It could be the central bank's final move. So only a small chance, but nevertheless a chance starting to get priced in. Then the next hike could be the last one. What else do I have for you today? So going into today, actually, then Tesla is going to steal the show later today after the bell, though. So not till after the bell. Already today, though, we've had ASML. So beating on EPS and missing on revenue. An article in here. So ASML beats earnings forecast, sees 20% growth amid China worries. So positives in there from ASML overnight. Well, not overnight, this morning, sorry, as well. Going back to 5 things in here. So recession riddle, earnings, Microsoft, we've spoken about that. Bank of America holding the majority of its employees with a pool of 1 billion restricted stock. We're here to retain workers. Futures slightly lower in here this morning on the back of a slide that we saw later in the session yesterday. Wasn't an aggressive sell-off in here by any means yesterday, but nevertheless certainly lower. Spoken about that. Is a US recession near? Making the call is tricky there. We've already spoken about that already. And market recoils as geopolitics add to tech jitters in here. Europe feels heat from US tech. German approves tank sales. So that's probably not helped markets in here this morning either. So it was kind of expected anyway, but Germany have been wavering about sending their tanks and allowing other allies who have the German-made Leopard tanks to allow them to be sent to Ukraine. Germany have approved their sending of their tanks, and also for other allies to send tanks, and also US sending Abrams tanks as well. So that probably, potentially is a negative for markets, right? It's probably kind of potentially destabilizing in that it could provoke Russia. So so we've seen a little bit of a negative coming through from that, and obviously down lower in here, European stock lower in here this morning on the back of Microsoft yesterday. So European stock bourses, not a big sell-off in here. We're about 1/3% down on the European exchanges, but if we look in here, significantly lower. Obviously Microsoft hitting in here 1.4% down on the Nasdaq, and between 0.5 and 8/10 on the S&P and 0.5%. So the sell-offs we saw in here bigger than yesterday. S&P was pretty much unchanged. Nasdaq kind of marked time as well, but after hours in here and going into this morning, notable setbacks primarily driven by Microsoft, and to a slight extent in here that kind of potentially I think that Ukrainian news as well with the German tank news. Okay, let's take a look at the charts. Running through this quite quickly in here. Whoops, it's logged me out. Let's log back in. So let's start off on the S&P. So significant sell-off yesterday. See, back to the lows we saw. So it was a dip and a rebound yesterday, hanging on. But, we've given back a significant amount. So this is kind of a little bit worrying. You'll see it on the 15-minute chart in a moment. But I'm kind of clinging to an underlying bullishness. And I think the market might shake off this negative Microsoft news in here. I think you might see a little bit of a dip. I think it's going to be a buy opportunity. So I do think the market could dip a bit lower in here. So you have undercut that low there from yesterday already this morning, okay? But the market's trying to stabilize. I think whilst we're above here, so this swing low here is 39.80 and a quarter. Whilst above 39.80 and a quarter, I'm not saying we're not going to dip down towards there, but I'm going to look for that kind of area to hold, that level to hold, and for a swing back higher. Again, you're looking at the counter trend line in here. This is not going to allow me to pivot this, is it? Oh, it has. There you go. So I'll be looking for potentially to buy back above the counter trend line. So up through potentially the little higher here, but more likely through the counter trend line coming in around 40.12 and a half in here at the moment. And then you've got this little overnight peak up at 23 and a quarter. So those are the upside potential trigger targets. Market trying to base in here at the moment. Look, got a potential little double bottom building here on the 15-minute chart. So watching for a break above this little overnight peak there as well. Or sorry, the more recent peak in here from the last hour or so. That high there, 6.5. So through 6.5, you get a mini double bottom, and then you got the trend line, and then you got the higher peak up there, 23 and a half. So yeah, so there's the potential upside. If it takes out this low here, then it certainly looks a lot more negative, and I'm willing to throw in the towel, and then it becomes a lot more bearish going into the session. So 39.80 and a quarter. Those are the trigger points there on the S&P. Nasdaq, similar story in here. Took out yesterday's low already, 15-minute chart. So there's yesterday's low. Got this topping pattern, double/triple top pattern in here. Again, hanging on to a more of a bullish trend. Obviously, Nasdaq more damaged, getting pulled down in here by Microsoft. And so the counter trend line in here, coming off the top, me draw that in for you. It's kind of coming away nearish these little swing highs. So I'd say really the market back above that little swing peak. That's the minimum it needs to ease the bearishness. So we're really watching the S&P. If you're trading the S&P, you probably should have an eye on the NASDAQ because that's certainly wagging it's the dog that's wagging the tail at the moment. So upside in here, what would we need to recover? 780. Back above 780, it looks a little bit more positive. It'll be reversing the trend line as well. If it gets a little bit above there, 780, 790. So 780, 790 on the top side and certainly above that little overnight swing high, 858. Downside, you see the impulse point here. So the impulse point is 671 and 3/4. And then the string of lows we have in here are lining up in the 11,650. So below 11,670, 11,650 looks far more negative. I wouldn't be surprised to see a dip down towards there, looking for this area to try and hold and to swing back from there and up through either this trend line or those little resistance levels that I've already outlined. Let's take a look at and I just realized I moved this one across. I was looking for that yesterday and I had to put that back on. So we'll drop that into there. Let's take a look at bonds first of all. Here's the 10 years. So 10-year bouncing in here, and the bounce in the 10-year. We did look for the bounce to came yesterday. I was hanging on to that bullishness while we held that support. Did rebound off of that support, pushing back higher in here this morning. So let me just get rid of, actually, I'm going to get rid of this one. And then looking on the 15-minute chart. So it came right after support. Here's the support in here. And it just pipped below that support there, held above this one. So pipped above that support, broke above the counter trend line. We spoke about this counter trend line yesterday. Not that one going up, this one coming down. So broke above there. And now market looking, it's pushed above this little swing peak here as well. So a base formed in here. Not any kind of classic base. You could argue some kind of inverse head and shoulders. It's not classic with like a neckline running across here. You could argue that some kind of deformed head and shoulders pattern in there, but nevertheless it's kind of using the bottom of this neckline as support now. So whilst above 1504, and there's no real upside trigger now up until we get to up here at 1512.5. Okay, so through to 1512.5, if you're already long, adding to longs, you can buy any dips towards 115.04. That's the treasuries. Let's take a look at oil and gold. Oil first. Sell off yesterday, and then a low level uneven. So I was looking to buy this. So significant sell off yesterday, turning the tone more bearish in here, and then nudging lower again in here this morning. And so I'm going to have to approach this one more of a topping pattern in here for oil. Looks more negative. But at the moment, a bit of a chop fest. I don't, really want to enter in here until we got back above like these peaks here. So really, looking the breakout in here. So 80.72 on the top side, downside 79.57 would be triggers there, quite simply. And gold staying bullish despite the setback we've seen in here today. So a slight bid to the dollar. Dollars had a slight bid to it this morning on the back of safe haven because we're in kind of slightly in risk off going into today. So gold down with dollar up. Dollar's not particularly strong, but slightly better across the board in most places, apart from against the Australian dollar. The Australian dollar doing its own thing with a very high CPI print. But dollar weaker in here this morning. Dollar slightly stronger in here this morning has allowed gold to trail lower. I think it's a buy opportunity on gold. Whilst above, we had that spike low yesterday. Whilst above the spike low at 18.2. Whilst above there, hanging on to a more bullish tone in here for gold. Okay, so looking now to trade again, drawing the counter trend line. You've got this one coming across the top, which isn't much use to us. But I'm not even going to draw it on. So you've got one that runs across there. This is the one I would be looking at off the secondary set of highs. And then above there and these little peaks in here. So really, gold, if you want a really close trigger on gold, 1927.9 and a little higher up, more like 28.29, 1929, 28.5, 29 would be up through the trend line. Okay. Bit of a whistle stop tour there. Sorry it was fast, guys, but sorry, got a busy schedule for me today. But we covered everything we needed to cover. Got through the calendar, got through the macro, got through the charts. Hope that was useful. I'm going to be back with you tomorrow on Thursday for another Bull versus Bear webinar. Until then, take care, stay safe, and have a great trading day. Bye.